Good morning, everyone. Today we are going to talk about anti-money laundering and its impact for the business. First, we move on to the our group members. This is our group members, group B12. And then we move on to the what is money laundering. Actually, I'm not going to deeply for the money laundering because my friends introduce and explain about that. So money laundering is basically the process of making the dirty money and it's connect to the economy. So mainly three stages of the anti-money laundering. The first one is placement. In placement stage, actually we making the dirty money into the financial systems and it's very harder to trace. Then the layering process. In that process, we that dirty money undergoes to the various transactions and it's very complex. Integration, that laundered money integrated to the economy and it's into a legitimate way. That's the problem in this process. And then I invite you, Vimut.
Thank you, Radhvi. The best way to explain the money laundering to a recent case study we have to study. So in here, I choose three different cases. I choose these three different cases based on the different scenarios. For example, one case relevant to our previous politicians, the second case relevant to the drug smuggler, and the final case I choose from the international context. Okay, let's discuss a few details about these details. In first case, Namal Rajapaksha, some kind of interfering with the money laundering case relevant to the 30 million transfer. In that case is still ongoing, but the activation of the legal legislation is the questions. In the second case, like Vele Sudha, very famous smuggler, he's handling different kind of funds to purchase some properties and the jewelries and a lot of things. So in this case, around 60 million, two different accounts, around 60 million funds identified as a dirty money. In this case, also ongoing case, but actually he is in the jail current moment with this different kind of criminal activities. In here, third case, I choose from the international scenario from the Singapore very recently. In 2024 April, they reported 2 billion money laundering case in Singapore. This case in terms of like 10 different. So I invited to Shahas to further explain of this one.
Thank you. So let's discuss about the impact of money laundering on businesses. Money laundering poses a greater threat to the businesses in terms of legal, in financial integrity and reputational. We can discuss this impact in two ways. One is in a positive and the other one is in negative way. Let us first discuss the impact in positive. So the first and foremost, having a strong AML environment, gives a business of an enhanced reputation. So that is, if a business like a banking industry or an insurance company, if they have a strong AML environment, that poses a greater reputation for their businesses. Banks such as Citi and HSBC also falls into this particular category. Second is if the AML environment is positive, businesses can access to global markets because of their the laundering activity is very minimal. And third is the compliance cost of the business is lesser. Next, we can discuss about the negative impact. The first is the reputational damage of the businesses. If let's say a customer or let's say a person who is laundering money is taken into the business, that will create a reputational damage to the business, and that will impact even the government also and even the country also. Second, it imposes legal and financial penalties to the business. And last but not least, it also increased the compliance cost of the business. Next, Azim will present on the AML techniques. Over to you, Azim.
Hope my colleagues would have given you a proper understanding of what money laundering with the real life examples in Sri Lankan context as well as the global context. So my discussion area will revolve around how to build an effective anti-money laundering framework. So in today's global economy, where money laundering schemes are becoming more sophisticated, having a robust AML framework is not just a regulatory requirement. So let's walk through the key components that make an AML framework effective. Before I go through those main key components, I just want to reiterate about the importance of the AML framework. An effective AML framework is not just about compliance. I reiterate again, it's not just about compliance. It's a crucial defense mechanism for protecting businesses from legal, financial, and reputational damage, as Shahaz explained. For example, in 2012, HSBC was fined a staggering $1.9 billion for failing to prevent Mexican drug cartels from laundering more than $800 million through their accounts. So with that context, let's break down the essential components of a robust AML framework. First, a successful AML framework starts with the strong policies and the procedures. So these policies and procedures should clearly outline the organization's approach to identifying, mitigating, and reporting money laundering risk. This means having detailed guidelines on everything from monitoring transactions to reporting suspicious activities. An organization's AML policy must reflect the local regulations, such as the recent acts which is brought to the Sri Lankan Parliament, as well as the global standards. So then it may ensure the compliance and it will prevent loopholes in the system. For instance, a financial institution might implement policies requiring staff to immediately report transactions over a certain amount, as those large sums of money may raise red flags. So the next critical step is performing regular risk assessments. Businesses or other the organizations need to continuously identify specific money laundering threats they regularly face, and they have to design their AML controls accordingly. For example, companies operating in high-risk jurisdictions like Cayman Islands or handling high-risk customers, they have to apply stricter controls. This proactive assessment allows businesses to adapt their AML efforts as there are a lot of new risks are emerging in the market. Next is that ongoing monitoring, which may require to catch potential money laundering activities in advance. So continuous monitoring will ensure that businesses remain alert to new threats. For example, banks use automated systems that flag unusual patterns, such as sudden spikes in account activity or cross-border transfers to tax havens like Cayman Islands and British Virgin Islands. So one such example is that JP Morgan in the past identified abnormal transactions in accounts linked to Bernie Madoff and his Ponzi scheme. It raised suspicions that ultimately helped uncover one of the largest financial frauds in history. So this highlights the monitoring is very important. Let's move on to the one of the other pillar of an effective AML framework is that customer diligence. So don't get deceived by the images of the screen. My colleagues have just put up these images to one of the social media gossips, but until such thing is proven, the people who are accused are not guilty. So with keeping that in mind, that I'm just reiterating about the customer diligence, which is very important when we go to the bankers, that they will look at our profile and where our funds are originating, and if they found out that it is suspicious, that they will go for an enhanced due diligence. And the framework should include a robust transaction monitoring system. Automated systems can help detect suspicious activities by flagging unusual transactions in real time. For instance, certain predefined rules may trigger alerts if a transaction exceeds a particular limit or if there's an unusual pattern. So in such cases, the organizations are required to file suspicious activity reports with authorities. That's a responsibility of the company or an organization with the current, the legal framework. And it will be very much useful for the internal investigation as well. So finally, the role of technology in AML is also becoming more prominent. So artificial intelligence and machine learning are now integral to advanced transaction monitoring systems, assisting the companies to detect unusual patterns and behaviors that might suggest money laundering. As an example, PayPal uses AI to analyze millions of transactions to identify any unusual transaction. And additionally, the blockchain technology offers a transparency in financial transactions, making it harder for criminals to hide the origins of their funds. And also the data analytics also enhances the accuracy of these processes. And with the heavy load of information coming to an organization, it is very unlikely or rather impossible for manually assess and analyze these unusual transactions. So the companies can use data analytics to do this. To summarize everything, that building an effective AML frameworks involves developing strong policies and procedures, conducting risk assessment, and implementing ongoing monitoring. It is also required that customer due diligence, transaction monitoring, and leveraging technology to stay ahead of money launderers. So by doing so, companies not only comply with the legal requirements, but also protect their operations, reputation, and long-term viability. With that, we come closer to our presentation. Thank you for staying with us.